Hey everybody, welcome back. Everything is rebounding really well, really nicely. I want to thank the mods in the chat for being here as well and keeping us all scammer free. So let's talk about exactly where we are in the market right now. Lots of stuff buzzing around, but there's also lots of excitement. And sometimes that excitement needs to be a little bit tempered. But let's jump in. There's going to be an information-packed video on crypto markets, the most you'll ever encounter. We work really hard to put this stuff together to make sure you are armed with all the information you need to make good decisions. And Bitcoin has been flirting with its longest winning streak in nearly a decade, since middle of 2013, if I recall. So we're going to analyze that as well, and a ton more for all the mining fans out there. We're going to look at that, a little bit of macro, a little bit of equity market stuff too, and a lot of crypto. So let's get our KPM on. And of course, this is always edutainment, never financial advice. So we're going to start with the good news, and believe it or not, there is tons of good news today, but there's lots of ugly towards the end that you need to be aware of as well. And of course the bad in the middle. So first, let's look at the market. This is over the last month. I normally look over the last week, but the last week was bonkers. So I thought we'd stretch it out to the last month to get a bit more perspective. This is everything against Bitcoin over the last month. You can see Ethereum has actually beaten Bitcoin over the last month, but Solana, Near, Avalanche, Filecoin have all beaten Ethereum, and they are performing very well. So that's an interesting little bit of perspective there. Now, over the last 7 days, you can see Bitcoin has actually beat Ethereum, up 25%, Ethereum 21%, and lots of dark green on the chart, which means everything is up north of 20%, which is really, really good for those in the market who thought it was dead. Let's look at equities real quick before we start jumping into the meat. Here's the last 7 days in the stock market for the beginning of the year, and crypto has outperformed equities, thank goodness at last. But drugs are down, a lot of hesitancy out there on the drug side, and there's a huge move in Amazon as well. Amazon's up 14%, Tesla's up 8.3%, Google up 5.5%, Nvidia up 14%, Microsoft 6.3%, Apple 44% as well. So that's the good stuff happening out there too. So let's talk about the big story that everybody's buzzing about. And Bloomberg posts this saying that Bitcoin is on its 14-day win streak. The record, by the way, is 15 days straight up. Now, if you look at all these days, yes, you could argue there has been a net positive change from that $16,821 on the 4th of January. And they had small little bump ups, but you've got to also measure like which exchange is this on? It's on XBT. And also what time frame do you use to measure this too? But again, either way, it is still extremely impressive, especially it's also called the most hated rally because everybody's expecting $10,000, $12,000, $3,000 types of number of Bitcoin, and they're frustrated. And very, very upset or salty, as some people say. Now let's look at how I measure. These are green candles, and green means positive for the day, red means negative. So if you look at how I measure Bitcoin performance for the day to day based on UTC, which is Greenwich Mean Time, there is a miss on the 15th of January, the 7th of January, and the 5th of January. So using this, you can see it's not a 14-day streak or soon to be 15-day streak, but again, very impressive nonetheless. So don't get too bogged down with those little details, but I thought I'd dig into that. There's a couple more to come. First of all, money into crypto has been positive. This is from our friends at CoinShares. Digital asset investment products saw minor inflows totaling about 9.2 million last week. Trading volumes remained low for some, but not for others. Bitcoin had some record trading volume days. And you can see that the rally was not led by investment products. As I've been saying, you've got people, big whales buying, and you've got every cohort out there is buying, every single cohort, including a lot of retail. So people know what's up. It's a different early reversion from the bear market that we've ever seen before. Again, this time is different. When we look at the asset flows by asset, you can see the biggest flows of any asset, even though it was small, was 10 million into Bitcoin. The short Bitcoin fund drained 1.5 million, which is good, less bearish action. Ethereum broke its 8-week spell of outflows with an inflow of 5.6 million, and it's benefiting from the broader improvement in sentiment. Other assets as well. Some saw a big, well, XRP, I don't know why anybody would own that, but that had a big outflow. And you can see as well, Solana and Polkadot saw inflows of 1.3 million and 0.4 million respectively. And XRP reversed those gains it had in the prior week with outflows of exactly 3.3 million. And all in all, it does seem very, very positive across the whole sector, as we saw. Now let's look at Bitcoin. It is still considered Bitcoin season with a score of 27. And this ranks and measures the performance of the top 50 cryptos and how they perform against Bitcoin. Now, when we dig into this a little bit further, I want to share one thing. And this is about Bitcoin ownership. And this was a cool study shared with me by Sanjay. Thank you, sir, for getting this to me. And this is the shares of each reporting across all sorts of cohorts and who actually owns Bitcoin. But the real news here is that 25%, you can pause the video and look at all the numbers that are there, but the big takeaway for me is 25% of Americans with income over $100,000 owned Bitcoin as of October 2022, despite the market. And given the power structure of the United States, that is significant because, let's face it, the US system lets the rich buy access in Washington, D.C. So Bitcoin already has a powerful US political constituency. And so for those who are worried about the US government banning Bitcoin, it's not going to happen unless you want to murder your political career. So that's great news regarding Bitcoin ownership. And there's a lot of other good stuff in there. I might, if you guys are interested, I might dig into this report some more about how different cohorts are allocating towards this asset class. But that was very impressive. In addition, there's another piece of stuff floating around that's getting people excited is the Bitcoin versus Fed funds rate and potential correlation there. And the question is it correlated? So we'll dig into that next slide. But this is a chart of the Bitcoin price action since about 2019. And it is also compared to the orange line, which is the Fed funds rate. That's on the left axis, Bitcoin price is on the right axis. And you can see, well, as the Fed funds rate goes down, Bitcoin price goes up. And as the Fed fund rate goes up, Bitcoin price goes down. So there is, you could argue, some type of correlation, because we know next with all of the stuff that's happening, we know that Fed funds rate is coming down. It's got to come down. It can't stay up because of the amount of debt. But let's see if there's correlation. This is a comparison of the Fed funds rate and the price of Bitcoin, but at the bottom is the correlation coefficient. And you can see here, there is technically no correlation. What you really need to do is look at the dollar index against Bitcoin, and it tells a much better story, and that is much more correlated as we go forward. So I just wanted to debunk that other piece of news, like the 15-day, this is Fed funds. Now let's talk about RSI for a second. This is a nice positive confirmation that Bitcoin is coming off the lows. And this is from Plan B. And you can see that the relative strength index, RSI, is going into light blue territory, which is a great verification that we're coming out of the long bear that we've been in. And this is the biggest pump and bounce of RSI that we have seen since 2019. So again, more positive news, positive data. Let's look at Grayscale Bitcoin Trust. Check in on the discount. And last week I reported it's falling fast. Well, it's still falling fast. A couple of weeks ago, this discount was nearly 50%. Now it's 36%. So that's very, very beneficial for all those who are holding. And I remember the time when it broke 35. I was like, whoa, that's incredible. Well, now we're back there. So again, long way to go, but very, very positive nonetheless. Next is miners, and this is a key measure of exactly what's happening in the Bitcoin world. Miners are turning their rigs back on. The compute power is from Bloomberg is blowing through yet again another record hash rate or exahash per second. And this is, again, a good indication that the industry, the space, etc. is healthy. And all of this happened because the Bitcoin price went up. Now, another view of the hash rate rising is from Tabby. You can see here we had that big dip back in late December when it was like 26th, 27th, when it was simply too expensive to mine. A lot of people shut down their rigs, maybe for many reasons, maybe for the Christmas holidays. Also, the price of Bitcoin was so low, it was just unbearable to run them. And all of a sudden, we are back up again. And that big red line with the arrow at the end going up and to the right is the progress of hash rate over time, which again keeps going up, which means the network gets more and more secure. The question is, when is price going to follow the hash rate? And it's way late at this stage. Now, let's talk about miner difficulty regression. This is from the team at Glassnode. And this model below here estimates the average cost of Bitcoin production. And currently it's at 18,798. And this difficulty basically reflects the ultimate price of the mining sector. So if you can mine above that $18,798, $795, whatever it is, you can turn a profit. If you mine above it, you can't. So that's the problem. And another good news as well, miners have stopped selling their Bitcoin. This is a positive sign. You can see they're beginning to accumulate Bitcoin again. And that's the first time we've seen accumulation as well. For the last 12 months, they've just been selling to cover expenses and scale their business. Now they're beginning to stack again because they know where the price is going, which is good. Also, Bitcoin RSI, another view of what Plan B had shown. Here you can see the RSI spiked up to a high that we have not seen again since 2019 or 2017. So that is also a historical moment. Not a big deal, but not a lot of people are focusing on the RSI. But this is more confirmation that the Relative Strength Index is now breaking records. And the price also should follow this real soon. Let's talk about another view of Bitcoin beating ETH over the last week. And of course, ETH beating Binance. Nice to see Binance is still up 11%. I think all the fear of Binance going under, not having proof of reserves, etc. has gone away, which is positive. But again, Bitcoin is winning, even beating the very impressive performance of Ethereum, up 19%. And when you look at altcoins, there's so many up 60, 80, 100, 160%. It's been kind of mind-blowing beginning to 2023, which again is why it's so hated, because a lot of people aren't on the train. Now, let's talk about another bullish sign. It's like non-stop bullish signs. But again, this is just data, and there's only one way to interpret it all. And that's why it's here in this category. This is the Bitcoin perpetual funding rates, and they have flipped positive again for the first time since December 2021, ladies and gentlemen. Now, funding rates, I think was December 4th or 3rd, 2021 when they were last positive. But the funding rates are interest rates paid by long positions, people who buy these perps, and the short sell positions on a perpetual contract. Now, what you have to remember is when the funding rate is positive, it means that long positions are paying short positions for the privilege of holding their position because they're very bullish. And typically, this means it's in these assets are in a high state of demand for Bitcoin. And this is always interpreted as very bullish sentiment because traders believe the price of the asset will increase and are willing to pay a premium for their long positions to be on that particular train. And conversely, when the funding rate is negative, it means that short positions are paying long positions a premium to be on the short train. So if you look at how this has all changed so radically in such a short frame of time, you can see that huge bear mark with the little ring I put on there, red ring. You know what happened back in November 2022. Yes, that was the FTX calamity. Everybody had to jump on short positions to protect themselves. And of course, sometimes when something happens and you start scrambling to buy insurance, the insurance is so expensive, it doesn't actually pay off. So it's like when the S&P 500 tanks to 3,500, people start buying puts. It's too late, sit it out. And also the other second red ring there is the bullish mark. Again, to reiterate, the first time since December 4th, 2021, over a year ago, 13 months ago, since we had this. So again, very positive. And we know the people that buy this stuff tend to be much more sophisticated. Let's talk about some stock market stuff. and correlation with Bitcoin. So here, again, from Arcane Research, you can see the 30-day correlation between Bitcoin and the Nasdaq QQQ is becoming positive. It's falling, which is good. We don't like when crypto and the stock market risk on assets are correlated. We like them to break free, and that's what's happening. And that's also reflected in the fact that Bitcoin so far this year has far outperformed the Nasdaq, and that's reflected in the chart. In addition, let's talk about some more cool indicators from our friends at Glassnode. This dashboard is, I call it the bear market recovery Confluence. They called it a Confluence summary, but it's designed to aid the identification of transitional periods between a Bitcoin bear and a more healthy market trend. And if you look at the key color codes here, so green is when the spot prices are trading above key pricing models, both technical and on-chain, things like realized price, etc. The yellow is increasing momentum in network utilization and higher on-chain activity. This is happening, but it's not happening full bore. So they give it a half a score. So it's kind of neutral. The blue is the market profitability returning, indicating seller exhaustion. Profits are being taken and the market is absorbing sell side. You could argue, well, they say it is not, but from some of the things I see, I think that would also be a neutral, not necessarily a red. And then the balance of USD wealth is in favor of long-term holders, indicating that high conviction holders are the dominant holders of the coin supply. And typically they like to flip it blue when 5 of 8 indicators are triggered out there. And we're not quite there yet, but it's getting there real close, which again is positive. Let's talk about profitability. This is the realized profit and loss ratio, which accounts for all USD size on the move. The model is also retesting the 1.0 on the underside, providing a first indication that profitable transactions are occurring and being absorbed by the market. So people are taking profits and there's enough money coming in the market to keep the price going up. And then we saw that especially over the last 5 to 7 days. Buys. No sell pressure, which is stunning. But the sell pressure is beginning to creep in a little bit here now, especially on that what was a critical 21K level. Now, in terms of SOPR, the SOPR is approaching 1.0, which again is in the process of retesting a value from below, but it's proven to be a key resistance level throughout the bear market. And a SOPR break above, ideally a successful retest of 1.0, has often signaled a meaningful regime shift as profits are realized and there's sufficient demand flowing in to absorb them. And there we go. So that is also very positive. In addition, miners are getting relief. This cool chart here, if you are into miners or mining stocks, obviously the more modern your mining rig, the better, the more effective and efficient it is at producing and mining Bitcoin. But here, this chart has 3 different bands representing. First of all, red is the most efficient miners. You can see here, they can still turn a profit when the Bitcoin price is at 12,500. The average, the orange in the middle, is the average miners, and they need, I can't remember the exact price, but around 17,000 to turn a profit. And those with the inefficient older miners, you can see they need a price above 19K to make that happen. So interesting view of exactly where the market is. And those mining companies now, with lots of modern rigs, are printing a lot of Bitcoin, which is good. Now let's talk about a little tiny bit of Tesla news here. This was interesting. There's a lot of still strange sentiment out there, and Tesla is supposedly turning a profit for the first time in 3 years in 2022 by virtue of the fact that they've turned on some stuff and fixed some stuff. But this I thought was interesting. This is the tweet views in millions by Automaker. BMW is number 2 on the list with 4.34 million tweet views. And the king, the 800-pound gorilla in the room is 275.61 million views of Tesla by Automaker. It's incredible. 50,000 views for Volkswagen, 170,000 for Kia. They obviously have very poor marketing departments. But, you know, one of the things people always criticize Elon Musk for taking over Twitter, but if it's even just exclusively used as a marketing vehicle for Tesla, That in itself could pay off. So we'll see. Now let's talk about Ethereum. Switch gears back again. Ethereum as Ultrasound money is now deflationary per this cool website called Ultrasound Money. Appropriately enough, you can see here the amount of burn so far per year is at 668,000 Ethereum, and the amount of issuance is 622,000. So therefore, congratulations everybody, Ethereum is now deflationary. There'll be no more sell pressure. I always talk about the inflation of tokens and how lethal it is. We've got some tokens that are around for 8 or 9 years. They're still printing 23 to 25% new issuance every single year, and they got 50 billion tokens in reserve and escrow. That's not the side you want to be on. You want to be on things with very low inflation. And you can take some inflation if you have really high growth, but this is very powerful and a very positive sign for Ethereum going forward too. Let's talk about some more blockchain news. I always say follow the developers, follow the money type of thing. Where the developers dedicate their time is where they reap the best reward, and they are considered very good allocators of capital if you assume capital is valued in time, which it is when you are a developer. So this is the new Electric Capital Developer Report. Big thank you as well to Kat for bringing it to my attention today. But this was just issued today. Now it looks at the total developers by chain as of December 15th, 2022. You can see top of the list is Ethereum with 5,734 developers. Again, the big gorilla in the room, nearly 3 times the next biggest, which is Solana, 2,082. Number 3 is Polkadot, 2015. A lot of people were surprised by Polkadot coming in so strong, and especially Kusama, 629. So if you look at Polkadot and Kusama together, it's a pretty powerful combo. Cosmos, also impressive, 1779. Polygon, 1100. Bitcoin, 920. Of course, we know Bitcoin develops slow and steady, but that's a big chunk of developers. Near Protocol, 781. Binance, 546. And Cardano, rounding out the top 10 of 465 total developers. There's also some other interesting stats on the right as to how this total has changed over the last year versus the last 2 years. And again, if people are interested in digging into this whole report, let me know. I personally would like to calculate the correlation between developers over time and price, especially taking into account a modifier for the bull market, bear market, etc. So if you guys are interested, I don't mind doing the work. Next, also the very positive news, which took me by surprise. This is Germany seems to be rebounding fast from a GDP growth perspective. And this is despite Russian gas interruption. The Germans were engineering a ton of fixed storage capacity to store natural gas. They brought 20 coal plants back to work because they did promise to shut down their nuclear, which is a bit of a head scratcher. And they're also bringing in natural gas from Norway, Holland, United States with all their ports. So despite what people thought would be catastrophic for Germany, it looks like they may be able to pull through. Again, government data could be wrong, but these numbers are impressive. What's also impressive, and we're going to weave in a bit of a potential soft landing narrative here, US consumer confidence is rebounding. And we did have that total poop. I remember calling it out in OCTA back in June, July 2022 when we hit 50. That 50, by the way, was an all-time record low for like a decade or 20 years. But now look how we've rebounded. It's nearly at the highest level. And it's funny because that 65.2 April 2022 peak, coincidentally, is aligned with, guess what? The top of the US real estate market, April 2022. The correlation between these numbers is mind-blowing and it gets me very excited. But you can see here at 64.6, it's not too bad. Of course, and I read a report today that New York real estate is up. Single-family homes are driving demand in New York, which is first time ever since 2020 because everybody left because of C-19. So again, more interesting patterns. Also, so much good news today. I don't think I've ever had so much good news. This is the 63% of the S&P 500 is now above the 200-day moving average. 63%, that's nearly 2/3. Now, why does this matter? Well, the 200-day moving average is commonly used as an indicator in the stock market. It smooths out fluctuations in the stock price over time and can help identify long-term trends. But when the stock price is above 200-day moving average, it is generally considered to be in an uptrend. And when it is below the average, it's considered to be in a downtrend. Now, it's also a key level of support and resistance as well as we go back in history. And that's why we look at the 200-day moving average as well. I look at the 50 and the 200, but the 200 for Bitcoin, for example, and other names. And, the thing here is nearly 2/3 of the S&P 500 are above the 200-day moving average. That is the most bullish stock market signal I have seen for quite some time. But there's more. So let's talk. Not all things are up and to the right. If you look at the top 50 cryptos over the last 90 days, you will see here that very few have outperformed Bitcoin. That's Bitcoin in the middle. It came out as black, so sorry about that. But you can see all the names that actually have beaten Bitcoin over the last 90 days. And that is Litecoin, Phantom, Lido, Doge, Ethereum, Monero, Matic, Mana, Aptos, Bitcoin Cash, Apecoin, Avalanche, and Binance. And of course, we have some stuff on the right, which I won't mention, but there are some names that simply have not beaten. But I do expect this to change very radically over the next coming, say, 20 to 30 days as altcoins go into high gear. I expect that to happen. Now we're going to switch gears and we're going to talk about some of the bad news that's out there. And there's bad news and then there's ugly news coming after that. So first of all, electricity cost break even. This is another cool chart that looks at the ASIC rig profitability for miners, the S19 Pro. And you can see here, I think the miner came out in May 2020. And until very recently, it is a flagship operational rig. But the colored zones in the chart reflect profitability levels for this rig under various all-sustaining costs. And, it is quite interesting to look at. So if you imagine purple, I think that's 12.5 cents per kilowatt hour. Green is 10. Yellow is 7.5 cents per kilowatt hour. Orange is 5. And red is 2.5. So the red stuff is very, very cheap. And what this chart shows in log space periods is where the rig is estimated to be unprofitable, will show up as gaps in the relative plot. So you can see here, as the price of Bitcoin and the hash rate increased, many rigs became unprofitable, especially if you are not in a cheap electricity zone. So again, this is why the mining companies sniff out not only renewable energy, but very cheap renewable energy. And that's interesting. I think as the hash rate continues to go up as well, this will hurt. I don't expect people to be able to make a profit unless Bitcoin price really shoots up a lot in the next couple of months to make a profit if you're anywhere 10 cents to 12 cents per kilowatt hour for electricity. In addition, NYDIG has massive miner exposure. You can see here they have nearly $400 million in machine-backed loans to miners. And this is causing a lot of pain in the industry. We have been acutely aware of the danger of debt on the balance sheet for many miners, and we do that in our upcoming monthly miner report, which is coming soon, just waiting for some final data as we go forward. And some of the biggest holders of this debt, you can see here, Argo owes NYDIG $100 million, Greenidge 81.4, Iris 71, Core Scientific 43.6, Stronghold 42.7, Rhodium 25, and Cathedra, which I never heard of until today, 17 million. But again, what they're probably going to be forced to do, particularly for those miners that are bankrupt, is repossess the rigs and then lease them out again and charge for them. So that in itself is a very complex, expensive process as well. Pick them up, unplug them, then take them somewhere else and plug them in and get them working. So let's also talk about interesting news for the stock market. Considering the strength of the stock market and 2/3 being above the 200-day moving average, this one from Bank of America, I didn't quite understand. Maybe people are lying on their survey. I don't know. But asset allocators are extremely underweight equities, and they haven't been this low in the survey underweight equities since the year 2005. That is 18 years ago. So the question is, what's happening? I know there's $4 trillion on the sidelines. I know some allocators aren't coming in, but after seeing the activity over the past couple of days, couple of weeks, especially since the S&P 3500 bottom, this is peculiar. So we'll track this as we go forward. Also, a little bit of perspective, chatting with the guys yesterday, CTO and Ran. One of the conversations that popped up was, okay, well, the crypto market could fall back down again if Binance blew up or Tether blew up. So I thought this would be interesting to cover. This looks at the history of big bankruptcies, scams, whatever you want to call them. So WorldCom, 186 billion, Enron, 70, Lehman, 60, FTX, 32. Some people say it's 13, some people say it's 32. It depends how you look at it and at what point was it valued. And then Tether is listed there as $83 billion. Your question is, though, could $83 billion blow up and disappear? I don't think so. Now, granted, this next chart is from Tether, so we can't trust anything. But apparently, they are 58% now US Treasuries. Now, it was a whole a hodgepodge of garbage and paper, commercial paper, etc., up until early 2022, where they started to clean up their act. Now, apparently, they are, again, that 58% Treasuries, US Treasuries, some money market balances, etc., some secured assets, but there is definitely still some shaky stuff there. But even if it did blow up, the loss wouldn't be that high because they do have some assets. They may not have all assets, they do have some. So I don't see this as a big risk, even though some people are worried about it. So let's talk about the ugly news, final segment of the day. So this one was probably the most alarming chart I've seen in years. And I've seen some ugly charts. Let me walk through this. This is a survey from Global 24, and they interviewed people all over the world if they and their families would be better off in 5 years than they are today. I hope everybody got that. And it's clear the world has issues like the WEF, Davos, a lot of reset talk, a lot of structural changes in the workforce, huge debt loads, not only for individuals, but also governments. And also maybe a lot of gloom because we potentially are entering a recession. But this is the most damning survey I have seen, again, as I said, in years. First of all, 24 of the 28 countries are at all-time lows for their 5-year outlook. This is done every single year. Second, the way you read this chart, for example, if you look at Canada, it says 28%. 28% of Canadians surveyed feel they will be somewhat or much better off in 5 years than they are now. But it's down 6% from 2022. So that means 72% think they will be worse off in 5 years. That's 3/4 of the population of Canada. But when you look at places like Germany, France, Japan, oh my goodness, 85%, 88%, and 91% gloom and doom for the future. In Japan, I understand because of their monetary policy, etc. But France and Germany shocked me, especially after the GDP numbers I just showed for Germany. That is strange. And of course, the only optimism that's out there is China. So that is stunning. So I think with everything going on, everybody, the message from this is, figure out a plan to get ahead. Because if this survey is right, the next 5 years could be bumpy and rough. That's why we need, as Shamath would say, schmuck insurance of Bitcoin. Now, let's also talk about, sorry about the ugly news today. This is the Russell 2000. This is the number of companies that are unprofitable. And it is, again, breaking new highs. And we are on the cusp of potentially going into recession. And over 40% of the companies in the Russell 2000, these are the companies beyond kind of the S&P 500, are spinning into a recession and they're unprofitable. And I always say 40 to 60% of companies in the stock market are zombies. They won't exist in 8 to 10 years. So again, like we do in crypto, follow the developers. In the stock market, follow companies that are profitable, heavily profitable, with fast sales and earnings growth. Critical, because remember, 40 to 60% are zombies, just like crypto. 98% are zombies too. And another bad news, China shrinkage. We have covered demographics quite a number of times, but here data released on Tuesday by the National Bureau of Statistics in China showed the population stood at 1.41175 billion in 2022. The birth rate was the lowest on record ever, and the death rate the highest since 1976. The natural population is growing a negative 0.6%. 0.6, I think, is people per thousand, and that's a slide from 0.34 in 2021. And again, this is terrible for a large economy because population contraction is a huge issue. It is like a red alarm fire. People are delaying marriage, people aren't having babies, etc. And as I mentioned, I think a week or two ago, India is now replacing China as the world's most popular country. So that is the bad news for China. That's why people like Peter Zeihan believe China has no future because they don't have any population growth. But anyway, on that sad note, hope you guys enjoy the video today. It was 47 nuggets of information, and thank you all for being here, and I'll see you all soon. Bye.